The question on the pain threshold, we're hearing now maybe they don't want to negotiate. I think it's clear that they should negotiate, right, from these high levels of tariffs. Just how much pain do you think they're willing to take in the stock market? We're, more than 11% off the 52-week highs right now. Downgrades in forecasts for U.S. growth. Yields are falling, but not for the right reasons. I mean, how much do you think they're going to be willing to stomach before they really start to make some deals?
Well, I don't think it's the question of how much are they willing to stomach in regards to the stock market. The president's legacy, I'm sure he wants to have a good economy. He's trying to rebuild the economy. He's trying to do things that in the long term he thinks are good for the U.S. And I think he understands the economic risks, and he's not looking to create a recession, and I don't think we're going to have one. So I am hopeful that this will lead to negotiation. And that, if he wants to keep a tariff on everybody, as I said, a 10% tariff could be easily tolerated by the markets. And if they scored it and put it in reconciliation, they'd get credit for it, and it would become law.
But right now, we're talking about the biggest changes we've seen, at least in a century, to the global trading system. And I think we're talking about 23% overall tariffs rates, which brings us back to sort of the era of Smoot-Hawley. I mean, I assume, again, not to put words in your mouth, but if we maintain that, that would be concerning for you?
Well, I think there's no question that at those tariff rates, you will have the economy adjust. So there are certain markets in certain places where the tariffs can be absorbed by the seller. There's other impacts. There's certain businesses that will move supply chains and can work it out. But there's no question that at a certain level of tariff, particularly some of these high tariffs that are 40% plus, you will see the impact of imports going down significantly.
Did you look at doing this in the last administration?
We looked at the reciprocal tariff idea, and we liked that idea. There was actually a bill that was drafted that we began to talk about. We didn't at the time come up with what the numbers were, so that wasn't something we did. But the concept definitely goes back to, we want to make sure there's a level playing field and making sure that it's fair. And again, I use China as the example because that is the biggest area of concern for a long time. And there's no question that the previous tariffs had an impact on the trade deficit and got them to the table. And they didn't live up to a lot of those deals. And, I would encourage, the U.S. and Chinese to sit down and look at that deal and make sure that China adheres to it. And that would be a starting place to reduce tariffs.
A big part of that period involved support and subsidies to farmers, for example. Do you think that's going to be the next chapter in this story?
It's a reasonable tool. I know the president wants to protect farmers, so if there's issues in regards to if the farmers get targeted, I'm sure he's going to want to provide subsidies to help them.
The other fun game, I remember this because you were on our air in 2017 and we were asking you about the stock market. At the time, it was doing quite well in the wake of his first administration. You said this is a mark-to-market business and you see what the market thinks. Yesterday, the press secretary was asked about the stock market and she said it's a snapshot in time. I wonder which one you think it is.
Well, it's both, and I do believe we're in a mark-to-market business. On the other hand, I remember sitting in the Oval Office when the president made the decision to put tariffs on China, which I did support, and we knew the stock market was going to go down a lot, and he announced it, and the market went down a lot. So, if anything, I'm surprised that the market didn't see ahead of time that the president has been telegraphing that he's going to make some very significant changes to the trade policy. And I think, as I've mentioned before, we've come into this administration with a market that was much higher priced than when we were last time. We have interest rates that are higher than last time. We have less fiscal room. So you take all those economic issues and you have to put them together. But I know the president is focused on the economy. And I think he wants to remake U.S. manufacturing. That's a big method. And I think there's got to be a pathway to get there. It can't all be overnight.
No, but do you think it's a realistic goal that Nike one day will make its footwear in the United States, or I mean, Apple would ever make an iPhone in the United States. I mean, I don't necessarily see that as a realistic expectation. Certainly not for some period of time. It probably would result in higher prices, certainly for U.S. consumers. And then, Stephen, we've got the whole issue of automation coming, and whether, in fact, even if you were to bring your manufacturing back, it would actually be people doing the manufacturing.
Well, look, Apple just committed a very large investment to the U.S., so they are going to make, I believe it's servers here, and that was a big investment. And my idea would be I'd give them trade credits. So if you commit to put $500 billion in the U.S., we'll give you trade credits so that you don't get charged all these tariffs on the iPhone coming out of China. Because you're correct, they can't. It would take them a long time to move the iPhone. There's other things they can move here. Now, as it relates to sneakers, I'm just absolutely not an expert on sneaker manufacturing, so I have no basis of commenting on that. But obviously, Nike can't keep production there at 46% tariffs. So either those tariffs need to be negotiated down, or Nike needs to figure out a different manufacturing process. But these things take time, and there's no question you see different stocks reacting accordingly.
Yeah, I mean, on the negotiating point, a lot of people look at Israel, for instance, which ahead of the announcement lowered its tariffs all the way to zero and any trade barriers to zero. So, and we announced 17% tariff increase on Israel. So I do wonder if that says something about the administration's approach here. They're a close, obviously, security ally, a close trading partner, where we're their biggest trading partner, and they did what President Trump wanted.
Well, I'd be a big advocate for Israel right now in trying to negotiate these down from 17% to the 10% minimum tariff. I agree with you. Israel's an important ally, especially given what they're going through. They're a great technology partner. So I'd be advocating they should be at 10%.